Good afternoon, everybody. Thank you for attending. Thank you, panelists, for joining today. So we have quite an interesting panel in front of you. Tokenized capital markets. It's the financial system, as we've been hearing over the last couple of days, is on the edge of some sort of reset. Tokenization, which was once kind of a fringe concept, is now being championed by all the big Wall Street names, from NASDAQ to S&P, Goldman Sachs, BNY Mellon. They're all making moves in this space. And I'm sure a lot of you saw last week, Robinhood's CEO just called tokenization, quote, a freight train that is barreling through the traditional system. So clearly this isn't theoretical anymore. This is happening, and it's happening now. So today we'll explore where tokenization is creating real value, what's holding it back, and how we move forward responsibly. We've got a great panel with us providing a mix of institutional, banking, technical, and infrastructure perspectives. So panelists, just to kick off, I'd like to go down the row here and for you to each give a quick introduction to who you are and what you do. Start here.
Sounds good. Happy to be here. Thank you for having me. My name is Fabio. I've been building infrastructure for capital markets for the last 5 years, and I've got to wear many hats, whether that's setting up the Genesis infrastructure for a layer 1 called Corium that is purpose-built for RWAs, to lately building the user-end application with a broker-dealer called Texture Capital in the US, and we are on track to be one of the first to launch a marketplace for tokenized stocks, specifically US equities for US users. So yeah, excited to be here and discuss further on the topic.
Excellent.
Thank you. So my name is Istvan. I'm also very, very happy to be here. I come from Raiffeisen Bank International. In case you haven't heard, we are a Tier 2 regional bank in Central and Eastern Europe. We're headquartered in Vienna, Austria. We have 10 banks in the region in Central and Eastern Europe as universal banks. And in Vienna, Austria, we do serve institutional clients and corporates. I've been very happy to have joined the group's group-wide competence center for the blockchain technology. We've been doing a lot of research, market development observations, a couple of proof of concept POCs in the past, but now that there is regulatory clarity, and I heard it pretty much from everybody who's coming from a bank, that now that there's this MiCA regulation, we can really get our hands dirty, so to say, and build up actual compliant products, because we are in a very heavily regulated market in the EU, so we can only bring safe and sound and compliant products to our clients. And I'm very excited to be working on now a project where we focus on a tokenization of a real-world asset that we hope to bring it to our clients sometime in the mid of next year. And I'm really looking forward to the discussion around tokenization today.
Brilliant. Lovely to meet you all. So my name is Dotin Romani. I am the former head of digital assets technology and director of emerging technology at the London Stock Exchange Group, of which I held that post for a number of years. But as of the summer, I've sort of stepped into a new role. So I'm running technology for a company called Assetera, and we're a European regulated broker. Our focus is on solving for distribution for tokenized securities. It's great to meet you all today.
Thank you all. So let's start with some of the opportunities that we're seeing in the space these days, and where the tangible value is, and what are some of the real use cases. Istvan, if I can start with you. We've heard the promise of tokenization for many years now, but where are you seeing actual value today? What's working, in your opinion?
Yes. I think that one of the really cool things with tokenization is that you can use this technology to fractionalize assets, fractionalize real-world asset, and this really creates the opportunity to build up new products, especially new investment products for, let's say, typically high-value assets. Think about now real estate, think about now some art, for example, or high-value commodities that were not accessible to masses, not accessible to bigger markets. And now with having regulatory clarity on the one side and having the technology on the other side, we can really build up cool new products. So I see tremendous opportunity there.
And following up on that, Dotin, from your perspective on market infrastructure, what recent project or milestone really made you feel like this is finally happening?
Yeah, it's a really great question. I mean, obviously, I was involved quite heavily in a lot of the digital asset work at the London Stock Exchange Group. We were building out a sort of end-to-end technology suite to digitize digital securities in a fairly agnostic way, solving for different use cases across both wholesale and retail. Certainly, I think some of the big, let's say, sort of tent poles, I think, in the evolution and adoption of digital securities in this space has been obviously the NASDAQ and NYSE announcements around tokenizing their entire listed book, which I think is going to be fascinating. And obviously, they're working very closely with DTCC within that. And I know they've been investing quite heavily in scaling out and building mature digital infrastructure. So I think we'll start to see real movement on the US side, specifically in the wholesale space, which is surprising to me because I was, for a very long time, of the opinion that private markets is really going to sort of lead the charge for digital securities. And we do see that, certainly on the European side more broadly. There's lots of initiatives around real estate, private asset, private funds, and others. And certainly we've been involved with Assetero and with a number of projects that are looking to distribute those types of assets specifically. So yeah, it's a big focus for us, at least.
And I'm curious that you brought up the point of kind of the U.S. Environment versus the European market. I'm curious what you're seeing in the differences in those two markets when it comes to tokenization these days.
Yeah, no, I think the sort of anti-crypto view that had sort of dominated US politics for quite a long time probably slowed the sort of US market down quite a lot with respect to sort of the evolution of adoption of the technology. However, it's a big market. They're traditionally big drivers of innovation more broadly, and so I think they'll catch up very, very quickly. Obviously, I think tokenization has been a very slow burn across Europe, and we've seen the fruits of evolution. Nevertheless, solving for the cash leg has been sort of a big challenge. I think that will be accelerated now with the Genius Act in the US, and certainly I think Europe will start to sort of pick up the pace on solving for an accessible framework for stablecoins, and equally figuring out whatever it is they want to do eventually with CBDCs. But no, I think we're really going to start to see the wheels turn much faster.
Hopefully. And Fabio, I'd love your input in all this and just get your thoughts on who's benefiting most thus far from tokenization. Is it institutions? Is it investors? Is it issuers? I'm curious your thoughts.
I think the real value that tokenization brings is to have both the asset ownership, right, the record of ownership, and the value of the asset, the money, on the same ledger. And right now that is not the case yet. So I think once we get to the point where the infrastructure for these capital markets or any sort of value transfer is on a blockchain, then the beneficiaries are not just going to be the issuers, but also retail in general. But what I see now, I see a lot of adoption of tokenized funds, and it is definitely the institutional buy-in into tokenization as it's low risk and provides immediate value for the banks or the institutions that are, of course, it's in their best interest to be able to rehypothecate an asset or improve settlement time and ultimately make more revenue. But I think the value for regular users will come in the next 5 years. I don't think it's super tangible right now, but that's why we are working on tokenizing something like the stock market and really getting the NASDAQ, for example, has 60 million transactions a day, and it's a very difficult system to disrupt because it already works within all the complexities that it has. Like there's middlemen involved, T+1 settlement across other steps that you have to take there. But my point is that once we get to that point is when you unlock the real value for everyone across the board.
Definitely. So we've spent some time talking about the optimism, but let's talk about more of the reality and some of the risks associated with all of this. Dotun, I'd love to start with you. As someone who's worked at exchanges, what's the biggest friction holding tokenized markets back? Is it the technology? Is it the regulation? Is it the readiness? What are you seeing?
It's a really good question. I think in some respects, all of the above. Large organizations move very slowly. They're very risk averse. Certainly, technology risk has been a material factor. You've seen a strong hesitation for many of them to sort of really dive in and adopt public chains for obvious reasons. I mean, many of these organizations are dealing with, business flows with very, very large, very high value assets and very large scale and large volume transactions too. So, within that world, and also, innately we recognize that securities are not bearer instruments like crypto assets. So, there does need to be the considerations around sort of governance models, and we started to see the emergence of that with sort of token standards like 3643 and 1400. But nevertheless, regulatory pressure in terms of slowing down the sort of evolution and disruption of the technology has also been a factor. I think, there's a lot there to sort of tackle with and grapple with, and hence why I think a lot of the tangible evolution has sort of come from the more sort of grassroots startups, fintechs, and then you're starting to see sort of the emergence of the larger players now as, the sort of policy makers are getting more amenable to these innovations and really helping to sort of encourage that growth and adoption.
Fabio, Istvan, do you have anything to add to that? Any other perspectives on what's holding everything back?
Yeah, from my perspective, the technology part is easy. In 2021, we had a fully working tokenized stock marketplace, and then the whole thing with the SEC happened. And I just think technology itself, right, like for the regulators, it's even appealing because there's more data integrity in a public blockchain, right? Now, from an infrastructure perspective, the risks in what I've seen ultimately come to consumer protections, right? So like day-to-day users, they're used to, for example, if they had fraud on their credit card or when they did a purchase, they're used to having someone hold their hand, right? Like they can call and dispute the charge and whatnot. And they don't get that experience when they are trading with MetaMask on a DEX, So I think that there's a middle point between those two worlds, and banks do play a role in there. So from a blockchain standpoint, what we have focused on is in addressing these risk points at the protocol level. So for example, if you're talking about chargebacks, we have smart token clawbacks, and we see other blockchains doing it too. When we talk about messaging and just compatibility, we adopted the ISO 20022 messaging just as a layer of communication with banking layers. And then thirdly, I think AML monitoring and everything that pertains, preventing fraud. We're also addressing this. There's companies like Chainalysis and onchain.ai that not only they analyze the data and try to predict this sort of fraud, but they are building models that can automate this in the future. So yeah, I think that's all we could do is like address the risk from an infrastructure perspective, but that's the main point, and that's why we believe that institutions are going to play a key role in mass adoption.
I'd love to continue on the banking front and bring you in, Istvan, and from your standpoint in the banking world, how do incumbents balance this kind of need for innovation with compliance?
Excellent questions. I think there are a couple of things that you can do here. So first of all, what we've seen in our organization, but I'm assuming it's pretty much the same in other big banks, is that it's really great to have an innovation framework in place that can really help you to assess, quantify, and eventually prioritize what innovation you want to go ahead. It's much better taking a framework and some measurable KPIs and data to pick a project rather than, let's say, gut feelings or personal notions. Especially when it comes to blockchain, we really had to put a lot of effort in education and explain to our board that it's not only scams whatsoever. So anyway, what I wanted to mention is really this framework is necessary. Then secondly, I'm a true believer of POCs. This is really a good way to understand the technology better, test it better, without the need to make it fully regulatory compliant, because you can do it just within the organization or sort of a friends and family testing. But still, it's a great way to learn also how this can interact with the legacy system that all of us banks have to deal with. And then there's two more things I would definitely mention. One is this regulatory dialogue. I do believe it makes sense to have discussion early on with the regulator about the plans, about the products that you foresee, especially when there's like such a, let's call it terra incognita, like MiCA, that's pretty much new for everyone. The regulator made the regulation, it's there, but no one really lived it through. So it's important to have this open dialogue and a continuous communication with them. Also, what's pretty useful here in Europe, we have a couple of, let's call it regulatory sandbox. And like we've heard about it, the DLT PRR regime, or in Austria, we also had a regulatory sandbox from the Austrian regulator. That's really helpful here to test the waters. And the fourth point is what always helps is spin-off. Spin-off, outsource it, maybe make a new organization, a new unit that can be sort of a speedboat when it comes to innovation and test further. So these are a couple of these instruments that you can really help to solve this match of compliance and innovation.
You know, it's really interesting what you're saying about regulation and working with regulators. I'm curious to hear a little bit more about your experience with that and maybe any learnings you've had from it or any tips you have for people in the audience who might be going down that path and want to work with regulators to kind of make all of this happen.
Yes, I really think that the best is to start with this conversation as soon as possible. So the sooner you start the conversation, the more you also understand what are their needs. They also understand you, and there's really place enough to maneuver with the product, because if you already build up everything, assuming that I've read the legislation, this should be fine, then this may be really a problem. So I would really encourage everyone to seek this discussion with the regulator, with the local regulator as soon as possible, because this will only help you along the way. I also took it as a really good sign that even today and yesterday at this event, there are a couple of regulators here among us, talking to us also on this stage. So this really shows also that there's a willingness from that side to engage in a discussion and work out this way of innovation.
That's very positive to see. Now, Dalton, I'd love to talk about another kind of risk that's high on people's minds, or kind of a challenge, which is interoperability. It often comes up. With interoperability, would you say it's more of a technology hurdle that people are facing, a regulatory or kind of a standards issue? What are you seeing when it comes to interoperability?
Yeah, it's a good question, and I think this is an area where, when we look at sort of the phase of where we are in the sort of evolution of tokenization, it's starting to become more and more critical for, I think, more and more firms. We've seen a real growth and sort of emergence of companies that are tokenizing various asset classes in different markets, in different domains, across different geographies. Once you've tokenized, however, what next? That's the question that your clients will be asking. That's the question you as a business will be asking. And I think the next phase of that has to come into the how do we get these assets into the hands of investors within our geography, across multiple geographies. How do we scale the value of these assets? And I think sometimes as businesses in this space, we sort of lose sight of the fact that we're not actually competing with other tokenizing platforms or other players. We're actually competing with the status quo. We're competing with analog issuances and analog lifecycle management and administration. And I think that's where we need to sort of recognize that within the analog world, if I'm a brokerage firm, there's no technology impediment, there's no platform impediment for me establishing a relationship with two investors, negotiating a deal and facilitating a transaction. Whereas in the new world, we need to think about custody, we need to think about, are the assets on the same chain? Do they conform to the same token standards that are compatible with my service platforms? And there's all of these considerations that we've sort of almost inadvertently brought into the picture. And these are the areas that I think we need to aggressively solve. Thinking about even sort of post-execution, thinking about the lifecycle management of the assets. How do we solve for cash flow disbursements? So coupon payments, dividends, redemptions. And yes, we can solve for them with respect to specific technologies, but we sort of need to think about models that can scale across protocols, across infrastructure solutions. And I think that's where more standardization, but perhaps through convention, is necessary. And I think there's a lot more thinking needs to come into that space.
Definitely. And Fabio, from the blockchain side of things, how do you build for regulatory compatibility without losing openness?
Well, I was going to add to the fact that, I mean, we've been working with FINRA and the SEC, and every single part of the product, right, has to be a submission for the regulators to foresee. And when it comes to interoperability, I think the hurdle really is the risk that one company takes. Like, let's say you have a tokenized stock that you want to move it to your other account where you have tokenized real estate. These two companies have different KYC providers, and they have different, maybe they have different regulation even. So if you want to be able to reuse that KYC, there's a risk component. And I think that part we haven't figured out yet. In the space, I see a lot of RWA projects that are secluded. So I definitely agree with Dotun that standardization would be awesome. I don't know if that's in the form of DIDs or is that an RWA token standard, but that's the thing. You can link it to the tokens as well, and I see firms like Fireblocks, for example, proposing their own token standard for tokenized products. So I see a lot, but I don't think we've reached consensus. Ultimately, what we are trying to do is work with the regulators directly and trying to get them to accept this model in which you get the token once you buy the stock. So it's kind of like a digital twin, and you still get the dividends, the voting rights, and everything that you would do while trading on the stock market. From a blockchain standpoint, sorry if I diverged a little bit from your question. What can we do is, I think one of the main things that we could do is, first of all, be prepared in terms of interoperability at the technology standpoint. We use IBC. There's other standards that are really good as well. I don't think I'm going to say this is the best, but it keeps expanding. You know, IBC now is on Solana, and there's bridges to Ethereum as well. So I think that's one key standpoint, to like be multi-chain ready from the get-go. The other thing that we could do is to have programmable compliance, right? And that's why we use smart tokens. Solana also calls this the smart tokens, but my point is like having the possibility of assigning things like whitelisting, clawbacks, and other compliance-specific features at the token level. So it's just more lightweight and more it's easier to be compliant ultimately with different regulatory setups. Yeah.
Definitely. So we've talked a bit about the opportunities, we've talked about the risks. Now let's talk about the concrete steps to move forward. And I'd like to lead off with you, Istvan. What needs to happen in the next 12 to 24 months for tokenization to become mainstream in banking?
Yeah, I think there's a couple of things that we can mention here. First and foremost, I really believe we need cool products. We need cool products and use cases that do address actual customer demand, actual customer pain. And building up on my thoughts from previously, I'm a firm believer of fractionalization. Of these new asset classes that now with tokenization you can really bring to the market. Think about now real estate. It really has a very, very high entry barrier, but when you use tokenization, you can maybe fractionalize, you know, flats or any community goods or you know, solar panels, you name it. That people can participate. So I really believe this is something to go ahead. Then secondly, as we were also discussing, I think standardization will really help to also establish an ecosystem via secondary markets. I think this is already the thought. My colleagues were building up on this. I think it's not enough to have a tokenized product that you sell and buy back from the clients. In order to make it flourish and scale, I believe an ecosystem would be great here, which would require, again, this technical standardization, token standardization, smart contract standardization, you name it. I also believe that additional regulatory clarity will be necessary. And now I'm thinking really concretely about Europe. You know, MiCA is in place. It's been mentioned a couple of times today. But there's also MiFID. Okay, so there are a lot of investment products that fall under MiFID. And if you take a MiFID product like, I don't know, bonds or some kind of ETF, and you tokenize it, it's still a MiFID product. But then how you kind of match it with MiCA. So I really believe this is also still a space to develop on the regulatory clarity. And actually, I also think that one idea here is also to use the stablecoin momentum. We've been really hearing a lot about now stablecoins and their amazing growth, which is really great. And I actually have a thought that this could be also used for the advantage of tokenization, because I see stablecoins as a cash leg of tokenized products. So I would really hope to see that now the stablecoin momentum goes on and is established, but eventually you will also need use cases and products apart from the transactional feature of stablecoins that are there. So I would love to see that now this momentum will also help to grow tokenization.
I hope the bank executives and regulatory leaders in the audience are taking notes. Thank you, it's fun. Doton, I'd like your perspective on this in terms of the next wave of institutional adoption. Where do you think that will be coming from? Whether new asset classes, new geographies, new investor segments? What do you see?
Yeah, no, I think I think multiple directions, right? So when we look at sort of the institutional space, I think on the wholesale side, there's certainly an interest in bringing, a lot of existing markets into the digital space. Largely, it's focused on operational efficiencies from digital infrastructure, and that seems to be sort of a big steer for many of these institutions. I think on sort of coming away from the wholesale side, I think it's much more of an innovation play. We're seeing a lot of interest, specifically from, let's say, more professional players looking to bring, let's say, traditional assets into the new Web3 world. Potentially leveraging them as a sort of eligible collateral for leverage trading in crypto products potentially. And there are lots of other use cases that we're sort of seeing the emergence of. But yeah, no, I think it's fairly broad. It depends on the asset class, but certainly I think accessibility is a big one. Innovation with respect to scaling and growing and evolving business practices, business models, and then really solving for differentiation and efficiency. So.
And Fabio, in your perspective, what infrastructure or what partnerships will make tokenized markets more scalable?
I think just to resonate with what István was saying, like stablecoins, once we have a framework where stablecoins can be used for cash legs, blockchain is the official record of ownership for securities transfer, and smart contracts can be used for automation, then we'll be in a much better spot to convince the key stakeholders that are kind of like holding on this adoption to come on board. And that has to do a lot with regulation. But if you ask me about key partnerships, I think partnering with broker-dealers or the institutions that are front lines dealing with regulators really helps. And I gotta maybe mention the case of El Salvador as well. They are absolutely on board with the vision to tokenize everything and offer kind of like a path for companies to easily get offered this legally in the country. We are actually launching a tokenized VC fund in El Salvador with an accelerator. And I think that is a good step also to get VC firms involved, because ultimately what you want to be able to offer retail investors is ownership and access to markets that are in traditional finance not accessible for them, right? Like with VC firms get in a company pre-IPO and they have certain return on investment that retail investors don't get if they go directly to the stock market. So I think that's one key thing. I was going to say something else, I forgot. No, ultimately, like if you can go on chain and there's investment opportunities for any risk profile, from you want something like a 5% return in a year, or you want something like a meme coin. I think once we can blur that, and provide this on the same one KYC platform, then we'll be in a much better spot. If we're talking about the future, that's how I envision it. So you can invest in your favorite sports team, the stock market, the European stock market, and a real estate investment in Dubai, all on the same platform.
And if you had to put a bet on it, El Salvador is happening today, and there are definitely some examples today, but everything else you described, what timeline do you see all of this adoption happening in?
I think within the timeline, we are in the institutional buy-in stage. So I foresee this as a 5 to 10 year change, although it can be accelerated, and competition between governments even is something palpable that is accelerating this. So yeah, 5 to 10 years is very conservative to say.
Jota, did you want to add something?
Yeah, just to maybe just sort of revisit the question of what are the big things that we could do to really move this sort of space forward, and sort of big challenges to attack. I mean, I would really sort of focus in on two areas. So one would be looking at how do we bring together effectively the market, right? How do we solve for critical mass? I would position this sort of co-opetition. We are lots of us new players and really looking to drive tokenization and digitization in the ecosystem, but nevertheless it's respecting the fact that really our competition is the sort of the traditional world, the legacy universe, and then how do we sort of really bring that together? Infrastructure is a big challenge. We need more standardization. We need greater interoperability and connectedness. So I think being able to sort of tackle that's going to be big. And then the other is going back to the differentiation point, and as sort of many of my fellow panelists sort of jumped into, it's thinking about how do we make these assets fundamentally more attractive versus their analog counterparts. And we're seeing the fruits of that. If you can take a listed equity today, which as a retail investor, I've got a 20, 30-day SLA to get onboarded with my retail broker, and then maybe 20, 30 days to subscribe to the actual asset on their platform. If I can turn that around such that it's accessible in my crypto trading app instantly at the push of a button with no minimum ticket size, so I can invest a couple of dollars in day to day, or at the end of the week when I receive my paycheck, that's powerful, right? And yes, you see some erosion of some of the rights and obligations of these assets in terms of how they're structured to bring that accessibility and to unlock it, but it's focused, right? It's a focused use case and a proposition. There are other propositions targeted to other demographics within the sort of investment community, and I think it's really about understanding how do you build that differentiation vis-a-vis the analog that I think is really important.
So in our last minute here, I want to do a rapid fire question for each of you to answer. We'll start with Fabio and go down the row. If you had to give one short line of advice to an executive that's exploring tokenization, what would it be?
Executive of what company?
An executive of an organization, of a private company that's thinking about tokenization.
One line, I would say, focus on composability and what's next. Don't tokenize something just because you can. Focus on what's the actual use case.
Fun.
Building up on this, I fully agree with Flavio. Start with a POC. Start small. Start with a clear focus, and really learn a lot on the technical side, and also as much as you can also about the customer side.
Milton?
Yeah, I think going back to the sort of previous points, really understand your use case, what's the proposition, understand the customer you're targeting, and again, how do you differentiate that offering vis-a-vis what they already have access to.
Well, thank you guys. We've covered a lot of ground, from interoperability to regulation to collaboration, so leaving the audience with a lot to think about. So thank you all for joining and sharing your thoughts.
Thank you for having us.
Thank you so much.
Thank you. Thanks, sir. Thank you.